Hi there, it's Jeff here. Are you revising contestable markets for your exams? If so, take a few minutes to stay with us and look at some of the advantages and disadvantages of contestable markets. Now, a contestable market is an industry where there are low barriers to entry and also low barriers to exit, allowing potential competition to threaten existing firms. And indeed, in these contestable markets, it is the threat of entry by new firms that disciplines the incumbent or the established businesses, even if actual entry doesn't really occur all the time. Now, when you're writing about contestable markets in your exams, remember, please, to use economic welfare and efficiency concepts. That is the pathway. That's the best way to get these top grades that we're looking for. And as we go through, the benefits and costs of increased contestability can be explained and analysed and evaluated using these concepts. And where possible, always try to include good topical real-world examples as applications, sometimes from the extract, sometimes from your own knowledge. So what are some of the advantages of contestability? Well, first of all, you'd expect me to say this: lower prices for consumers. It is the threat of competition that keeps existing firms on their toes, and they have to keep their prices low to avoid losing market share. So Ryanair, EasyJet, for example, operate in a fairly contestable environment. It does depend on the route in terms of this degree and scale of competition, but the potential for entry from other budget airlines, Wizz Air, for example, has led to competitive pricing and low fares on average. And lower prices can lead to an improvement in allocative efficiency and gains in consumer surplus. Increased productive efficiency could be an advantage. Let's take the broadband market for example. New players such as Hyperoptic have entered the UK market in recent times, essentially forcing incumbents like BT, which have merged with EE, didn't it, to invest in faster services to improve their cost structures. So the obvious key point from this slide is that contestability can lead to improvements in allocative and productive efficiency. That's the key points for your revision notes. And then there's a dynamic gain over time, innovation and quality improvements. So in a highly contestable market, then firms have to innovate to maintain their position and to ward off potential entrants. So let's take fintech as a good example. The likes of Monzo and Revolut and others, Starling, have driven innovation in the banking sector, incentivizing traditional banks such as Lloyds and Barclays to innovate. They have to. And over time, we see firms invest in new technology, new production processes, new platforms, hopefully benefiting consumers with improved products and services. A good example there will be the energy market. We've seen an influx of renewable energy firms, Octopus Energy, high profile, and with them pushing for cleaner and more sustainable options. So really, when you're talking about contestability, everybody, think allocative, think productive, think dynamic efficiency, and you can't go wrong in an exam. Here's the contestable market diagram. It's basically the same as a monopoly diagram. If there was no competition, then a monopoly could price at price P1 with an output of Q1. That's the profit maximizing price and output. Whereas when the threat of entry is high, when it's a genuinely contestable market, monopolies or established firms will tend to price closer to P2 because the threat of entry is real, it's tangible, it's palpable. And P2 is where normal profits are made. Now, there's no unique profit maximizing, price and output in this market. It does depend on the strength of actual and potential competition. But at P2, output will be higher, prices come down for consumers, and more people are brought into the market. Effective demand is higher at lower prices. So there is your contestable market diagram. And we have a separate video on this diagram on the YouTube channel. What about the potential downsides or the drawbacks of contestable markets? Well, first of all, long-term investment. So firms may avoid long-term investment because of the constant threat of new entrants. There's some evidence, by the way, that might have happened in things like the water sector, the energy sector. UK energy suppliers have been criticised for failing to invest enough in infrastructure. And there's also a market instability point, which is a good point to make, that frequent entry and exit can lead to volatility. The UK energy sector is a good example. We deregulated the market about 5-10 years ago. Many small operators entered the industry, Bulb Energy, for example, OVO, and that can sometimes cause disruption for customers, in particular when businesses fail, go bust, which increases the risk of increased government spending on bailouts. If many small firms enter the market, there's a risk of dilution and fragmentation. What do we mean by that? Well, if the market size is a fixed, relatively constant given for many smaller firms in the market, the potential for any one firm to fully exploit scale economies might be diminished. It does depend in part on whether the market is growing and also the scale of new entrants. Often we find, by the way, that new entrants into the market are not small businesses at all. They are large-scale firms that are just moving into a new industry. And the potential risk of lower quality, this is a slightly more intangible point, but if businesses focus solely on cost-cutting, product and service quality might decline. There's an example there, the private tutoring market in the UK. By the way, thanks for subscribing to Tutor to You. But in this market, there often are some low-cost entrants that prioritise affordability over high-quality teaching, potentially. And it's a very fragmented market for sure. Things like health and beauty services is highly contestable, and often they're lightly regulated, which does increase the risks for consumers. A couple of good examples for you. If you're preparing for exams, I would be thinking about banking and energy. So the banking sector has certainly become more contestable. The data suggests that some of these banks are really still very small, but they have a presence. And we call them challenger banks, Monzo, Starling, Revolut. They have had some disruptive consequences. However, a Metro Bank would be another good example, wouldn't it? As of 2023-24, these banks really are still struggling to achieve sustained profitability, illustrating the tension that can exist between innovation and sustainable growth. The energy sector is good. So the last 10, 15 years in the UK, well over 40 small energy providers have entered and exited the market. So it's a good example of hit and run competition. And that demonstrates both the gains from contestability through innovation and lower prices, but also the potential drawbacks, which we've mentioned, the instability and the lack of investment. So make sure you have a couple of good examples to hand in your notes. Contestable markets is an absolutely key market structure, always appears on exams. And if you've got some examples, got good analysis diagrams, and understand the link between contestability and economic efficiency and welfare, you'll be in a great place for your papers. Thanks for joining in. Take care, stay safe, stay positive, stay curious, and see you sometime soon.